This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, welcome back to Invest Like a Pro. This is Joe Rabil. In today's video, I'm going to show you how to use the upper time frame to really help you frame out the trade. I get a lot of questions about the upper time frame because I typically focus in on two time frames, right? The higher time frame and the lower time frame. And for those of you new to this channel, I've written a book and I've done a course on multiple time frame trading using moving averages, price structure, as well as MACD and ADX. And one of the things that I've added in is discussing what to do with the higher time frame. So even if you're trading off the daily and using the hourly to trigger, you do want to know what's going on the monthly and the weekly. So I wanted to focus in on a video because I get a lot of questions about this. Let's do that. But first, I just want to make mention, a lot of people that have made huge progress, guys that I've coached and everything, what I've figured out is that they started out with the book. They read the book, they understand the book, and then they made progress from there by either contacting me or taking some of my other products. So I wanted to make it available to more people, and so I'm offering it at a discount right now in a PDF format. It will teach you more about trend and momentum in multiple time frames. All right, let's go ahead. To find that, go to rabilstockresearch.com/book. All right, let's get into this. I want to use the XLV. So I've used the XLs lately. I think they are good trading vehicles, but I look at them on a regular basis, and I noticed something that I thought was worthwhile in discussing. Now, usually when I do the zigzag, I usually put it on the smaller time frame, but this is a trade that I'm doing on, this is the higher time frame. All right, that's the daily chart, and the lower time frame is here on the hourly. This is what I'd call the upper time frame. All right, now this is not really a part of the trade, right? These are the two time frames that I'm trading off of. All right, this is my setup time frame here, and this is my trigger time frame here. But on the upper time frame, we're trying to avoid, and I'll even look at the two upper time frames, both the weekly and the monthly. I just want to make sure there's not any interference with any kind of trade that I want to do. But more than that, I want to help support the trade, especially with this time frame, the upper time frame. All right, so if I get this move, so let's just look at the way I would go about figuring out whether to do the trade or not. All right. So first thing I would see is a move down here on the daily chart. This decline here, which is essentially there's the break of the trend line. Actually, this would be the break of the trend line right here. So we've made a move down, and then we make a rally back up and make a lower high, and then we make a lower low, and then the rally back up here is the one that I'm looking at. So this is the two. That's the two in a potential change in trend. All right. Now we've got red DI crossing back above for the first time. Really in this move, that's a legitimate move to the upside, taking out the green for sure. And during the rally, it's actually holding at the 25 line. We've also got a pinch play here. All right. Now, if we zero in on this, you can see it was a little sloppy. It didn't make two higher lows, and then it did right here, right as it got into the zone between the 18 and the 40. But the MACD did not cross and formed a clear pinch below the zero line. So this is the first cross, downward cross of the zero line. And so I like the look of this. Now, before I go searching for a trigger, the first thing I want to do is go look and see what's going on in the upper time frame and make sure I'm not missing anything. Because the reason why I do this is that early in my career, what I noticed was I was looking at trades here, and then I was immediately going here. And sometimes I was starting here because I was like, wow, I love the look of this little pattern that's developing on the minor time frame, and then I would look up, right? And I would try and figure out if I could make a trade out of it. And then I would completely ignore this. So now what I like to do is I have my setup time frame. I'm looking for my setup. I've got a setup. All right, I immediately want to go down here and say, does this time frame support this trade? Well, you might think in looking at this, let's just see, this was September 14th. So if we go here and the week of September 14th, this was still sitting right around the moving averages. So you might have thought that this wasn't a good setup or we should avoid it. But that's not how I would view this. And the reason is that if you look at what's going on, well, first of all, I think it's good to point out there's no trend. There's no momentum in the trend. You see how the MACD is crossing back and forth above and below the zero line? You see how the ADX is low and we don't have any strength in either the buyers or the sellers? So when that takes place, I know I don't have a lot of strength in any direction. All right. The other thing that I notice is the moving averages are basically going sideways. But what's more important than that is price is just going up and down, it waving up and down through these moving averages. They are showing zero respect for the moving averages. So why should I worry about these moving averages if price keeps climbing above and below, right? So the other thing I like to do is have that zigzag up because I can see there is zero trend here. You see this move? I mean, it's actually working inside these ranges. Now, what that will tell me is what kind of target I've got. And I would use the lower end in this zone here to figure out that there's support right around 126. So if I do a trade off the daily chart, I need to make sure that the risk reward makes sense down to about 126, something like that. All right, I've got those two lows down there, and then there's more lower. But in this situation, I would probably look, somewhere in the zone between these two bottoms here. They're pretty close together, and that's really what I would be looking for. So if I'm going to do this trade here, I need to make sure it makes sense on a risk-reward basis to get down below, basically to the lower end of this this level here. So that's how I would go about using this upper time frame, because if you ignore this, you're going to run into situations where you're doing a trade and it's actually looks like a short on the daily chart, but you're pulling into a rising 18 on the weekly chart or something like that. Or you could be doing a short on this time frame or even a long, either way. But in this case, let's say you come down and you're actually doing it right on top of this support zone. Right? You're getting a sell signal and it looks good on this time frame, but you're way too close to support on this time frame. So that's what we're using this upper time frame for. We're trying to avoid getting in on something that really doesn't have enough room. So this time frame is helping us frame it out. All right. Now, once we know that we've got room, we know that we don't have any respect for the moving averages, so we have room down to this lower end. We can now go back and look for a trigger setup, which takes place here. We cross down below, we form a pinch play. So this is a pinch play here and then a pinch play here, right there. Now, this had zero line overrun to the upside. So that's why we don't take the trend line break. We want to take the next signal, and that would be the pinch play following that. All right. Now, we know during this rally phase, we don't have any strength in the buyers because the ADX stayed low. So, use all of the things that I talk about in my course to your advantage. But I did want to spend a few minutes going through this and making sure you understand the higher time frame. Just because the moving average is there doesn't mean that you don't take the trade. You have to see whether price is respecting it or not. And I think a lot of times throwing up the zigzag will help you see it as well. All right. Hope this helps. Go ahead and let me know if you have any questions or comments. Thanks.